We start with our top story. Global markets are in a state of turmoil today, with steep losses seen across Asia, Europe and futures on Wall Street as fears of a full-blown trade war rattle investor confidence. The sell-off was triggered by President Donald Trump's refusal to back down on sweeping tariffs, which have now been met with retaliatory measures from China. Hong Kong's Hang Seng Index closed down by a staggering 13.12%, its worst drop since 1997, the Asian financial crisis. Japan's Nikkei 225 plunged 7.8%, while Australia's ASX 200 fell by over 4%. Europe wasn't spared either, with Frankfurt opening 10% down and sharp drops expected across Paris and Milan. In Hong Kong, tech giants Alibaba and Tencent tumbled by 14% and 10% respectively. In Japan, Renesas Electronics dropped over 14%, while SoftBank and Advantest also saw heavy losses. Indian markets are deep in the red too, with Nifty and Sensex both down by 4%. Trump defended the tariffs, calling them medicine and warning foreign governments they would need to pay heavily to lift them. Meanwhile, US markets are bracing for their worst fall in nearly 40 years amid rising fears of higher prices, weaker demand and the risk of a global recession. With more than 50 countries reportedly reaching out to Washington for trade talks, the world watches as the economic storm intensifies. We are now joined by Akshita Thomas, Associate Producer for NewsX World, who's going to give us more on the figures. Akshita, what can you tell us?
Yes, so hello Tom. So following the stock market plunges across Asia, we are now seeing the early hours of European stock markets plunging down. Let's take a look at the DAX Performance Index, which was earlier at an almost 10% drop, which has now slightly recovered but is still facing a loss at 5.92% drop. If we check FTSE in London, we are now at a 5.23, and it was at almost 6% earlier in the day. We are now dropped down to 4.89 if we can see. Moving over to IBEX 35, we can see that it's at 5.34%, and moving on, we can see that CAC is at a 5. With other markets also facing a 5.21% droppage. We are seeing AEX at a 5.71. Most of the European markets have taken a hit, but if we take a look at the Asian markets, the Shanghai Composite, which was earlier at an 8% droppage, has now recovered slightly but not really, at a 7.34% at the moment. And if we move over to Hong Kong's Hang Seng, which was earlier at a 13.2, is now at a 13.22%, and the Asian markets have clearly taken a much bigger hit than the European markets. The European markets have just opened a couple of hours ago. The Asian markets have taken a much bigger hit to Trump's tariffs, and Trump continues defending his policy, saying that sometimes you just have to take the medicine to fix something. So over to you, Tom.
Thank you very much, Akshita. We move on. Vietnam and Taiwan, among the countries to face the steepest US reciprocal tariffs, have offered to eliminate all levies as basis for trade talks. Vietnam was the first off the block to slash its tariff on US imports to zero after the US imposed a hefty 46% duty on goods from the Southeast Asian nation. The development came after Vietnamese leader Liam spoke with Trump in the weekend in what the US president called a very productive call. Vietnam has already cut several duties in the lead up to Trump's reciprocal tariff announcement, dubbed Liberation Day, and has pledged to buy more American planes and agricultural products. Meanwhile, Taiwan's President Lee Ching-te on Sunday offered zero tariffs as the basis for talks with the US, pledging to remove trade barriers rather than imposing reciprocal measures and saying Taiwanese companies will raise their US investments. In a video message released by his office, Lai said that given Taiwan's dependence on trade, the economy would inevitably have a hard time dealing with the tariffs, but he thought the impact could be minimalized. He added that tariff negotiations can start with zero tariffs between Taiwan and the United States, with reference to the US-Canada-Mexico Free Trade Agreement. We move on with more tariff news. Indonesian President Prabowo Subianto said that Jakarta would pursue diplomacy, not retaliation, in response to President Trump's sweeping tariffs on Southeast Asian nations, calling for a fair and equal relationship with the United States. Speaking at a rice harvesting event in West Java, Prabowo said Indonesia would send a high-level delegation to Washington to negotiate the 32% tariffs, stressing, "We want a good relationship, an equal relationship." India, also hit by a 26% tariff, has taken a similar approach. Officials say the Modi government is leveraging an ongoing trade dialogue and may qualify for a reprieve under a clause allowing exemptions for countries taking a significant step to improve reciprocity. The US and India aim to close a trade deal by autumn 2025, and India has already cut duties on US imports like bourbon and high-end motorcycles. Still, Trump's tariffs threaten to drag India's GDP by 20 to 40 basis points and could devastate its diamond industry, which relies on the US for over a third of its exports. We now joined by Dr. Erin Watson, CEO of Baker and York, located in Melbourne. Thank you very much, Dr. Watson, for joining us on the programme today. We were obviously woken here in India by negative numbers all across the Indo-Pacific. Australia as well was hit by this. What are your thoughts on specifically the markets in Asia, and then we are now seeing the European markets open? What are also your thoughts on them, and how do you think they're going to turn out?
Well, I don't think it's that surprising. I mean, we saw what happened in the United States with their markets there. Then in Australia, our ASX 200 lost around $100 billion in its biggest one-day fall in 5 years, which is enormous. And then when we look across Asia, I mean, countries that are very reliant on the US in terms of, say, for example, garment manufacturing. Look at Bangladesh, look at Vietnam. You've got huge crashes there in the markets, but that's really unsurprising. These were countries that have huge tariffs put on them by the United States, and so the markets are responding accordingly. And of course, you'll see the same thing in Europe as well. So it is really interesting to see what's happening, and you'll see this nuance across the entire region based on what were the tariffs and what is that dependence on the United States. One thing for Australia is that in terms of exports, we're not hugely reliant on the US, but we are rather cushioned by that 10% tariff and being in that bottom bracket.
Dr. Erin, obviously it was the Asian markets this morning that were hit the hardest across the world. How should your average non-investor be worried, or is it just investors that need to be worried about this?
Yeah, it's a really good question. I mean, when you look at, say, for example, in Australia, all Australians are investors if you earn an income in this country, because you have a portion of your income that's paid into a superannuation fund, which is a market-led pension that Australians that then rely on. So those superannuation funds that invest all around the world, and you can direct your superannuation fund into, say, more risky or less risky investments. Some Australians have self-managed super funds as well, where they have a little bit more control over where their investments go. So in that sense, if you look at a country like Australia, we're all investors if you earn an income in this country. So if you open up your app with your superannuation balance today, it looks pretty miserable compared to what it did a couple of months ago, that's for sure. So having said that, anybody, who has investments, across the region. And I don't know the numbers, but I'm sure there's plenty of people who'll be deeply concerned, regardless of whether they're actively investing or have that more passive arrangement like the majority of Australians do with our superannuation funds.
Dr. Watson, what do you make of Trump's response to this whole thing? He's described it as medicine. Something that's hard to take initially, but then in the long term will improve. What do you make of this expression that he used, and what does history tell us about this situation and how it will progress? Will it get better?
Well, history tells us that that's not how it happens. History tells us that free, open markets and liberal trade lead to prosperity and economic prosperity. I mean, again, if you take the Australian experience, we had 30 years of uninterrupted economic growth before the pandemic hit. And that was basically based on trade liberalisation that happened in the 1990s. We have a really strong network of free trade agreements. We are a trading nation, and that has led to Australia's prosperity. The trading system that was established after the Second World War, if you were to look at the numbers globally and the number of people that would have brought into prosperity and taken out of poverty would be enormous. So the idea that this will take us back to some kind of prosperity by having closed markets, by increasing tariffs around the world, is a bit of a furphy, when that's not actually what's happened since the end of the Second World War. I think that Americans, they are being hoodwinked in the sense that they're being told that this will lead to prosperity for them, when in fact their prices are going to go up in a country that's already had huge rates of inflation anyway. And so, if you're going to go down and buy, I saw some indicators today around the price of an iPhone, and it was astronomical how much the price of an iPhone is going to go up.
Yeah.
And in fact, I upgraded my phone yesterday because I'm concerned about it. So I think that Americans are being sold a bit of a lie here as well. Where is the evidence in history that a more protectionist economy is going to be good for Americans? What I find interesting is where Trump says that he's going to try and get rid of taxation, income tax, and have tariffs instead. It's still going to be a tax on American people, because they are the ones who are going to be paying when they go down the shop and have to buy some clothing or a car. Jaguar
Yes.
Land Rover not exporting to the US anymore. So they are the ones who will suffer, and they're being hoodwinked in what they're being told by the US government right now.
Dr. Watson, what do you think of these different responses that are coming in from different countries? You have the likes of China, who obviously imposed reciprocal tariffs on the United States. Then you've got South countries like Vietnam and Taiwan, who are offering to remove their tariffs. What do you make of these different ways of responding? You've obviously got Canada as well, who have also imposed reciprocal tariffs. What do you make of both of these different opposite type of responses, and which ones are more likely to affect the stock market the most?
Oh, well, look, I think that I don't unfortunately have a crystal ball about the way the stock market is going to go. But look, I think what is interesting in terms of some of these responses is Canada's response, where they say, well, okay, we are actually going to be leaders of Western liberal economies now. We are going to try and take charge here. You look at the very, very sensible response that came from the Prime Minister in Singapore, which is obviously a very key market in the region. Very, very sort of firm, calm, this is concerning. However, if we're able to sort of pull together as a region, so I think that kind of leadership is going to be really helpful when it comes to the market and how the market then responds to that. One thing I do find very interesting is that I was reading an update today where there's a huge amount of money going into the market as well now. So, you might find some interesting responses where the market has dipped. Dip is even the wrong word, where it's tanked significantly. That is an opportunity for investors to get into the markets as well. So I think that, like I said, those stable, steady sets of hands that we're seeing, like from Singapore, like from Canada, I think will be very reassuring.
Dr. Erin Watson, thank you very much for joining us. We are now joined by Dr. Ajay Dua, former Commerce Secretary, joining us from New Delhi. Thank you very much for joining us, Dr. Dua. I want to start with your thoughts waking up this morning and seeing the crash of some of these Asian stocks across the Indo-Pacific. Should people be worried right now?
So thank you for having me first. And I think we need to remain worried. The world over, the investors, as businessmen, traders, whatever you want to call them, because we have entered into a very uncertain economic world. I say this because with 50 countries under the radar of the United States, including some unknown islands of the world, including where only penguins live, the President Trump has imposed duties even on them. The fact remains that the responses from different countries to what the United States has done, which comes into effect on the 9th, what was announced on the 2nd, is going to be different. And we've seen that some countries lying down, keeping quiet for the moment, and agreeable to pay the 10% which came into force the day before in the United States, and then the additional tariffs which will come into effect from the 9th. But some others are not, and that includes the mighty economic countries of the world, including China. China has taken on the US head on, and it also knows where it hurts the most. It's aiming at the agricultural exports of the United States. 20% of those exports come to China. It's decided to protect itself against those such exports, and it's going to hurt President Trump politically as well. Excuse me, because the states of the United States which are agriculturally dominated are the ones who had voted heavily in his favor, and they would find that their products now exports coming down. On the whole, I like to just start by saying that one doesn't know what's going to happen, but there could easily be a recession in the United States quicker than we think, and the recession would mean, and this recession is going to be combined with inflation because the tariffs are going to hike up the rates for consumers, and the two combined are no good. And with the United States being the biggest economy, for India the biggest trading partner, all this hurts, and it's going to hurt even more.
Yes,
that's what the market has reacted the way it did.
Dr. Dua, what can you say about Trump's reaction to all this? He's remained very calm and very positive when he's giving his press conferences and is using positive language, while people on Wall Street and economic experts are panicking. What does this say about him as a leader and his economic policy and attitude towards these tariffs?
Look, he's the one who started this tariff war, which is now resulting into all kinds
Dr. Dua, would you call it that? Would you call it a war?
I think so. If you start levying tariffs which are as high as 50%, isn't that a tariff wall? Isn't that starting off or imposition of tariffs which could lead to an economic war of the kind which has just begun? I'm actually very, very pessimistic about the effectiveness of the measures which have been taken by the United States. It could throw the world into an absolutely tumultuous place. Economically, results from it would be affected geopolitically, vice versa. Today you have the Prime Minister of Israel making a dash to the United States to plead for removal of that 17% duty which has been imposed by President Trump on Israel, one of the closest partners of the United States. That's been done to the European Union. It's been done to the United Kingdom, all kinds of countries to which till the other day were solidly with the United States, and United States with them. Now, hasn't President Trump disrupted the world order in more than one way? So does he have an option other than to just take it lying down? What else can he do? Tell me now. If he's done reciprocal duties against 50 countries, which includes friends and foes alike.
And Dr. Dewar, like a war, you see different countries approaching this situation in different diplomatic and economic ways. Okay, so you have Canada and the likes of Canada and the likes of China who have imposed reciprocal tariffs on the US, and you have the likes of Vietnam, and you have the likes of Taiwan, who have just said that they're going to reel back their tariffs on the US that they previously had on the US in order to kind of gain some negotiating leeway. You obviously mentioned Benjamin Netanyahu, who's also in Washington right now to negotiate more on these tariffs. What does this say about these leaders and these different countries' approach? What is the best way to going forward to negotiate with Donald Trump on his tariff policy?
I think each country would have to devise its own strategy. I don't think we can talk about a common strategy, or as China is saying, it's also going to approach the WTO. President Trump couldn't care less about the WTO. He's made it known more than once, starting right from his first term. So that countries should get together, come under the banner of WTO, which stands for free trade. That would work? I don't think so. So each country's relationship, each country's perception of how it can live with or live without China or without United States is going to be steering its moves forward. So European Union has taken a stand that we will be together. And I think United Kingdom would probably, though not a member of the EU any longer as we know, but would probably also stand by them despite the duty rates which have been reciprocal duty, which has been levied on the UK is at a different lower rate and a different one. But the fact is no common approach is possible. Each one will have to fend for himself or itself. And I think that could result in an unconcerted approach, divided approach, could probably be more harmful in the end than it appears. It could expedite the disruption, economic slowdown, as well as the other economic consequences which could follow from the beginning of a trade war.
Dr. Ajay Dewar, thank you very much for joining us. We are now joined by Gerard Al, Field Marketing Manager and China Expert, live from Dubai. Thank you very much for joining us, Gerard. Some of these numbers that we've seen today, particularly in the Asian markets, and now the European markets are opening. What are your thoughts on these stocks throughout the Indo-Pacific and now in Europe falling after Donald Trump announced his worldwide tariff plan?
Yes, it's quite a rout also in East Asia, but also here in the Middle East. You saw heavy losses in Hong Kong, the biggest losses in Hong Kong and also in Tokyo, both in both countries, or both markets, Hong Kong and Japan, are heavily dependent on foreign trade and on exports. However, I'm less pessimistic than my previous than your previous guest and my predecessors who spoke here on the show, because what is this crash? This crash is imposed, and I disagree that it's a war. I think it's not a war because U.S. goods are still flowing. The U.S. has not declared any diplomatic cut-offs with any countries, but there are higher tariffs definitely. But these market drops now, these declines are imposed by something which we knew would come. When President Trump was elected last November, he already announced that there will be a harder tone in relation to foreign trade. So I think many traders, and by the way, this is not by no means a recommendation to buy or any recommendation to trade whatsoever. It's just my personal opinion. I think many traders in banks and investment banks will now also look carefully what they would buy, where they can buy the dip, so to say, because this is an unprecedented market crash globally. And I wouldn't compare this also with the 1930s, but these drops also take the heat of markets which have been rallied since 2020. Since March 2020, markets have mostly rebounded when the pandemic shock impacted the global economy and global stock markets. So now the heat is taken out, valuations are coming down across the board. We see even Bitcoin down 8% today, where people said before Bitcoin would be a security, a new golden reserve, safe haven, so to say. So I'm less pessimistic than the previous speakers.
A lot of economic experts, including a billionaire backer that backed Trump during this 2020 election, has said that yes, Donald Trump did obviously reiterate that his favorite word was tariff, and he did say, go on this rhetoric that he thinks America has been ripped off. But many economic experts are saying these global tariffs are absolutely unprecedented. I mean, this close advisor to Donald Trump, this billionaire Trump backer, he's called it an economic nuclear war that is about to break out. Those are his words. What are your thoughts on that?
Well, as we discussed before with the previous guest, he mentioned Bibi Netanyahu being in Washington today. So now the countries will come one by one, knocking the door in Washington, and they will be forced back to the negotiation table. And that's what I said also in my interview here on NewsX a month ago. The tariff policy is a kind of means to bring the countries back to the negotiation table and to remind them who's still the economic power. It's still the US. China, of course, is hard on the heels of the US. We're the second biggest economy in the world. But Donald Trump wants to put the view back on the US economy and force the countries back to the negotiation tables. Definitely there's critiques. Definitely there's criticism from the allies, from economists, from the Wall Street. Maybe there will be some adjustments also in these tariffs, which he has announced earlier last week. However, the rhetorics are typical for President Trump. We are used to this, also nothing new. We had a first term already before 4 years ago. So it's Trump style. I read all his books. I read Art of the Deal. I read Think Like a Billionaire, and it's full of bullish language, so to say. But as a businessman, he knew also that the heat had to be taken out of the stock markets, of global markets, because there was way too much optimism in the markets. And I think this was also what his intention was as a businessman, as you see the businessman.
Gerard, you also said when we last spoke that people in China do love Donald Trump. Do you think they still feel the same way after these? And we've got some lines coming out of China now calling Donald Trump's tariff policy protectionist bullying, as the phrase. What are your thoughts?
Yes, there is an admiration. There's definitely a basic admiration of Donald Trump. The Chinese prefer people with clear words and with clear actions instead of hiding behind something. Well, there might be now the mood a bit more sore, but the People's Daily, for example, today, China's leading newspaper, the second biggest newspaper in the world and the biggest newspaper in China, People's Daily, it's in a government-owned newspaper. They have an article today from April 7th today on the top front page, strengthen China-US investments, ties for shared economic growth, and it's about the new Tesla factory in China. So this is a subtle signal to the US government, to the Trump administration. Let's work together. Let's try to solve the issues, get the heat off the rhetorics, and work together, because you need us. Tesla sales were plummeting recently because Chinese electric cars were booming. But the signal here is you need us also. You need the Chinese consumer. You need tradeways. You need the Silk Road. You need logistics in China, the ports, also to spread your goods. And 3 weeks ago, China's paramount leader Xi Jinping welcomed most top CEOs from America, including Apple, including Boeing, so and brought them to the table and wanted to make business. So I think here again, this is a signal to tell Mr.
Yes.
Trump, let's work together, and let's get back to the reasonable tone.
Gerard, there are also talks of the EU putting forward a possible plan for reciprocal tariffs on the US, for a vote to go through on Wednesday. How do you think that this is going to turn out? 20% is obviously what they're facing from the US. Do you think that that vote will go through? Do you think that's the right way for the European Union to negotiate with the United States?
The question is, who is the European Union? There is not much unity anymore in the European Union. For example, Hungary opposes Brussels' way of dealing with the crisis in the Ukraine. Slovakia is opposing Brussels' way how to deal with Ukraine. Now, going back here to the tariff questions, this will be a tough one. But what I hear also from my country, Germany, that people in Europe and the European Union see the United States lesser and lesser as a partner, but more and more they say we have to find our own way to trade, our own way to defend ourselves, and our own way to speak with one voice. Maybe under pressure now, the European Union finds a common denominator. I wouldn't be too hawkish with President Trump, I believe, and would be my advice to the European Union.
Gerard, Germany actually has just seen its stocks crash 10% today, with threats of further deterioration from the incoming German leader. What are your thoughts on this?
Yeah, I mean, Germany needs the U.S. market. I'm a child of the 1980s when the American economy was booming, and that also made West Germany. I grew up in West Germany, and the West German economy was booming because more exports to the U.S. also meant that we had it all in West Germany in the 1980s. The German stock market is now definitely under immense selling pressure because we are an exporting country. We need the US market, but we need also the Chinese market. Other emerging markets like India, like Africa, like Latin America can not yet mitigate losses in the US. Here definitely there will be pressure, and there will be strong tone coming from the interim government. The current Chancellor, Olaf Scholz, is just, you can say, a lame duck, so to say, because he's only at office pro forma before the new Chancellor, Friedrich Merz, will be elected then in Parliament in a few weeks. But Germany has to find a way to convince the other European Union partners here to find a common voice, a common denominator, but also not to put the US too much into the corner.
Gerard Alfil, thank you very much for joining us. Very informative as always. We now move to Akshita Thomas, Associate Producer for NewsX World. Akshita, what can you tell us with the numbers? What's going on the markets currently?
As we had previously discussed, the European stock market has opened, and the early market numbers were plunging, with the numbers going as high as a droppage of 10 to 13%. And now the markets have slightly recovered. If we look at DAX index, which was earlier at a 10%, is now at a 6.06%. And if we look at London's FTSE index, which was earlier at a 6%, has now dropped down to a 4.83%. The other markets as well are currently around at a 5 to 6%. And if we look over to the Asian markets, which have closed for now, the Shanghai's Hang Seng has closed at a 13.22%, and Taiwan's index has also closed at a 9.70%. So this is one of the biggest drops, one of the biggest drop records that Taiwan has on Taiwan has on records. And as Trump remains defiant on these tariffs, and he urges the Americans to stay strong and hang in tough. Let's see what is yet to come as the US markets are to open later in the day.
Thank you very
Thank you,
much,
Tom. Over to you.
Akshita. Hong Kong markets have actually suffered their biggest one-day drop in